Well, anyone who knows anything about the economy was calling it, and the Reserve Bank of Australia confirmed it.
You know what?
Yeah, we have enjoyed a couple of recent rate cuts, but then,
well, as Ross on Friends would say...
Here we go, pivot! Pivot!
It was certainly a pivot. The RBA did do just that, pushing the cash rate back up 25 basis points to 3.85%.
Yeah, and after reining in inflation somewhat, the Reserve Bank boss, Michelle Bullock, says the rate rise is necessary to ensure we don't let it get away from us again.
Now, I know this is not the news that Australians with mortgages want to hear, but it is the right thing for the economy. I said in December that the board had been alert to signs of a pickup in inflation, and we cannot allow inflation to get away from us again.
And that could mean even more upward movement on the way. Federal Treasurer Jim Chalmers was still backing his economic credentials to Sarah Ferguson on the ABC 7:30 last night.
You were so confident in your ability to manage the economy in a way to keep interest rates down. What went wrong?
Well, what we've seen in recent inflation data is that it's come in not that much higher than we were expecting, but higher than we would like. We've been upfront about that. We know that people are under pressure, and this interest rate decision today will put people under more pressure. We acknowledge that too. But more than acknowledge that, we're acting on it. We're rolling out cost of living help. We're cutting income taxes 2 more times this year and next year. And we're managing the budget in a much more responsible way, in a way that is unrecognisable to our predecessors who left us higher and rising inflation, an absolute mess in the budget, and we've spent 3.5 years making some progress, but there's more work to do.
Jim Chalmers on 7:30 last night.
Now, Leith Van Onselen is the chief economist with Macro Business. Leith, firstly, should we be questioning Jim Chalmers' economic management?
Yeah, look, I think we should. There's 3 fundamental reasons why Australia's inflation has risen, and it's actually among the highest in the developed world now. And first of all, we've got housing inflation rising very quickly, and part of that is because the government's still running a very high immigration program into what's a supply-constrained market, and that's pushing up rents, and it's also helping to push up construction costs, and housing is about 1/5 of the inflation basket. And then obviously we've got very high government spending, but that's both at the state and federal level, but into a supply-constrained economy, and that's also pushing up demand into a supply-constrained economy. And finally, we've got rising energy costs, which is driven in part by poor government policies around gas and electricity. So that's also feeding into inflation. So this is really a homegrown problem, and it's really a problem of government policy and government excessive spending.
So should we be bracing for more to come?
Yes, unfortunately we should be, because the Reserve Bank's own statement of monetary policy, which was released on Tuesday alongside its decision, their forecasts are actually for the official cash rate to rise to a peak of 4.3%. So that implies another 2 more rate hikes. Now, these are assumptions. They're not that it doesn't mean that they'll do it, but that's what they're looking at. And the RBA doesn't expect the underlying true mean inflation, which is the one they look at, to fall back to the middle of its band until after June 2028. So that basically means we're going to have this sort of highish inflation for a prolonged period, which means the RBA is likely to keep continuing to hike interest rates.
Taming the inflation beast. That's what it's all about. You mentioned some of those underlying factors, but Leith, even in personal spending, why are we spending so much?
Yeah, so the personal spending, I'm going to be a little bit controversial here, but it's actually been driven mostly by older people who own their homes outright. So a lot of the spending is actually by the older generations. The younger generations have actually cut back quite a lot, and that's because they're spending so much money on rents and mortgage payments. So rents have risen by about 42% over the last 5 years, according to Cotality. And as a result, young people have less disposable income. Obviously, mortgage payments have gone up a lot in the last 5 years, even though they fell a little bit last year. And housing is very expensive. So that spending is actually more from people who aren't impacted as much by these interest rate decisions because they own the homes outright and they don't rent because they own them outright.
So just picking up on a couple of those points, let's look at anyone with a mortgage. So if you have a $600,000 variable rate mortgage, you're probably looking at an extra $90 a month with a 25 basis point increase. Have I got those numbers about right?
Yeah. So the average mortgage size in the country is actually $700,000. That's for a new mortgage. And so a 0.25% rate hike adds about $110 a month. Okay. And obviously, if we get 2 more, which is what the RBA's assumptions assume, that means that people are looking at a $330 increase cumulative. in monthly mortgage repayments on a $700,000 mortgage. So it's obviously, a pretty big hit to their disposable income.
And I guess one approach some people would say to weather the rises is to ignore the cuts, keep paying your standard monthly repayment. But is that the way to ensure you're not left scrambling to find the shortfall?
Yeah, and thankfully most people who have an existing mortgage have kept paying that higher mortgage rate despite the 3 rate cuts last year. So they have a bit of a buffer there. But the people I'm most worried about are those who were sucked into the market under the 5% deposit scheme that came in October last year. So we've had about 20,000 first home buyers into the market with 5% deposit. And obviously they've obviously borrowed 95%, which is a hell of a lot of money. They've stretched themselves. And now I think those people are the ones who are most vulnerable to these rate hikes because they're sitting on big mortgages at the same time as rates are about to go up.
Well, Leith Van Onselen, on that point, do you see those house prices moderating at all because of these interest rate rise? You look at the growth in house prices here in Brisbane and southeast Queensland, it has been absolutely ridiculous, not just last year, but for the last few years on end.
Absolutely. So according to PropTrack, which is a property analytics firm, Brisbane's dwelling values have risen. They've basically doubled since the start of the pandemic. So we're talking a monstrous rise. They're the most expensive in history relative to incomes, etc. So yes, I think these rate hikes could actually, if we did get 3 rate hikes as the RBA assumes, I think that'll definitely knock that wind out of the market and it could actually send house prices falling eventually.
Really? Will that happen? Because the government doesn't, judging by government policy and effectively the government taking equity stake in homes, they don't want prices to come down.
Yeah, so they certainly don't. But I'm trying to look if you look 18 months ahead and assuming Brisbane's values keep going up for another 6 months or so because there's so much momentum, I think we will get to a point where, just to put it into perspective, when the Reserve Bank hiked interest rates by 4.25% after the pandemic, we did get price falls across the country, and Brisbane actually fell as well, but that had obviously run up a lot. I think if we got 3 consecutive rate hikes, we would get the heat coming out of the market.
Well, for now, for many people, it's about balancing that household budget. Will they do it? On the other side of the coin, of course, is the retiree or investor, and the rate rise is welcome there, Leith.
Yeah, that's right. So there's always winners and losers with this, and about 1/3 of Australians don't rent and they don't hold a mortgage, so they own their homes outright. So they're really winning because they haven't been hit by these massive rise in rents. Obviously, they're not impacted by the rate hikes in terms of paying out a mortgage, but they do receive more money on their savings. So for them, it's a win-win.
A win-win. You're not used to hearing that term when we're talking about interest rates, though, are we? Win-win. Leith Van Onselen, we look and see what happens, and will we be in for some more rate rises? Thanks so much for talking to us.
No problem. Thanks, Steve.
Leith Van Onselen from Macro Business.